last time you were here, I was asking you about if you were making a call on consolidation. I guess you were making a few literal phone calls on consolidation. Some people are going to look at this and say, it's a 51-year-old magazine that you're buying, but there's more to it than that. How much did the digital properties really make the value here?
A ton, and I'm glad you led with that, because a lot of people know New York media for New York Magazine, particularly if you live in New York, but all over the country and all over the world now. It's relevant, it's iconic, and has a great history, and it will continue to have a great future in print, of course. But what you may not know about New York media is that its digital business is really its primary source of revenue, its primary source of growth. They've done an outstanding job of growing. And it's not just by taking the great journalism that's in the pages and putting it onto the internet. It's about creating new properties, new businesses. One, for example, is called The Strategist, which is an online shopping guide that has a great lead generation business attached with it. But it's just entertaining, fun stuff to go through, whether it's that or The Cut or Vulture or Grub Street. These are great properties.
Now, if I'm being cynical looking at this space, I say, look, Google and Facebook are squeezing the heck out of digital advertising profits. And at the same time, you guys and New York media just unionized. You have to deal with the unionized workforces, so your costs are going higher. What do you have to do to really make this work business-wise?
Well, I think you raise a great point about the nature of advertising, which is that, listen, scale matters, quality matters, performance matters. This merger accelerates all of that for us. Vox Media alone, with our outstanding networks and our ad tech and everything that we can bring to bear for clients, was already in a really strong position. Now we just vault to kind of the top of the list. But importantly, it's not just scale for scale's sake. We've seen mergers that are about that in the digital space. This is about quality. It's about relevance, but it's also about scale. You get the best of both worlds. We think that's a really appealing value proposition for marketers who are really looking to build brand, top of the funnel marketers in particular, who want awareness, who want to be associated with engaged audiences, who want that capture that zeitgeist.
Will there be cost synergies, which could also mean layoffs?
There won't be layoffs as a result of this merger, but we do think there's going to be a lot of efficiencies. There's going to be system stuff. So we will be able to operate more efficiently, but the big upside, the big synergy, if you will, is from the revenue side. I mentioned advertising. We have very little overlap in terms of clients and customers, so we hope to bring more value to them. But there are new business lines, too. There's the commerce business line I mentioned. There's digital subscriptions, which is a fast-growing area for New York media that we can now piggyback and leverage as we look at our business. And, of course, we bring a lot to them. We bring a television business. We've been successful in selling to all the new OTT services. We bring a podcast business. We bring a concert and live events business. Together, we think a lot of revenue opportunity will come from it.
No one would blame you for going to, say, a less frequent paper copy. Is that a possibility? I mean, you look at what EW has done and how SI has changed, the actual physical magazines.
That's not necessary. In the case of New York Magazine, the actual print product, they're doing well. Like all print publications, over the past decade, they've seen that decline, but they've stabilized it. And so we don't need to make any changes there.
A couple of years ago, somebody would have expected for you to do a video deal, perhaps, because everybody was rushing after video ad dollars. Has something changed that you're going really in the other direction? Here's very much a property that's strong on the written word, but has pivoted towards subscription and still has a print product.
Yeah, well, listen, this is a video opportunity, and I'll make the case for it. Our company has been really good at video. We have the leading YouTube channel in news. We have probably about 15 million YouTube subscribers and tons of views. But even better, we have companies like Netflix and Hulu and PBS and CNBC working with us to create television products as well. New York media is less mature there. They're starting to do that stuff. They have some shows on TV as well. We could bring their intellectual property, their talent, into the digital video age. That's how the value is created. That's where the upside is.
When you see some of the price tags of properties that are going to Netflix and Apple and paying for shows that are 25 years old, is this crazy?
It's definitely a race. And, crazy is probably a strong word, but it's great for audiences. It's great for content companies like us, of course. And, will it find its level? Absolutely, like any other industry. But I think that's a long time coming. These streaming wars are just beginning. And the competition is now on. Netflix clearly had a huge head start. we are partnering with them. We're also a big partner with Hulu. We have a big food deal with our Eater brand, partnering with David Chang and Chrissy Teigen.
We mentioned that at Code, right? That's a big deal.
That's right. That's a big opportunity to create a whole new food network, if you will, within Hulu. So we're excited to do that, and we're going to work with all these partners. And I think they're all going to bring something different to the table, and consumers will choose.
How is the ad market? And do you see any weakness either because of uncertainties or just seasonally right now?
Right now, the ad market is in a good place. It's strong. I think we benefit from having a good value proposition. It's obviously a cyclical business, so we'll keep our eyes on that. But we're having a good year.